the heck is going on with this real estate market? Pending home sales are up for October. In fact, they're way up. The inventory's increased. There are more houses to choose from, but interest rates also shot up in October over a full percent, from 6% to over 7%. So is this a good time to buy or not? In today's video, we will discuss these current trends and help you decide whether this is a good time to buy a home or not. And if you stick around to the end of the video, I will give you some tips that are guaranteed to help you navigate any real estate market. So like, subscribe, and share, and here we go.
Just above 7%, but it dipped in September, and that got homebuyers somewhat off the sidelines. Let's turn to Diana Olick for more. Diana?
Well, Kelly, pending home sales in September jumped much more than expected, 7.4% higher compared with August, according to the realtors. It's the highest level since March. Sales up 2.6% from September of last year. Now, these are pendings, which are based on signed contracts, so people out shopping and making their decision in September. Take a look at mortgage rates. The 30-year fixed was coming down all through August and touched its most recent low of 6.11% the second week in September. It stayed right around there for the rest of the month before, of course, shooting higher in October. So this is really a reaction to that drop in rates and much more inventory on the market for sale. Fast forward to today, and you see the 30-year fixed at 7.02%. Almost a full percentage point higher than that September low. And that's why we've seen refinance demand take a hit, down 6% last week. There was a mini refi boom in September. That's gone away. Demand from home buyers was up 5% for the week and 10% higher than a year ago. I would note a year ago, rates were around 8% on the 30-year fixed.
Interesting thing is that her data is just a little bit off. The 30-year fix today is sitting at 7.25% at 0 points. Now, if you had tried to buy a house a month ago, you could have actually gotten a 5.875% interest rate at one point. So that's costing you over 1.25% on a 30-year fixed. Is that a big deal? Yeah, actually it can be. Why? Because every 1 point is going to cost you another $100 per $100,000 financed. So if you're looking at a $500,000 home, 1 point is $500 more per month. That's a lot. But is that to not buy a home? Let's find out.
Our next guest says the surge in mortgage rates that we've seen lately is the equivalent of a 6% increase in a home's price from a monthly payment perspective. Let's bring in Alan Ratner with Zelman and Associates. It's a Walker and Dunlop company. Alan, welcome. So, I mean, this has an impact.
Yeah. Hey, Kelly, thanks for having me. No question it has an impact. You know, there's a lot of noise in the housing market right now. Diana mentioned the election, higher rates, et cetera. But at the end of the day, you know, this is a market where affordability remains incredibly stretched. There was a lot of optimism this time a month ago that rates would be, you know, continuing on a downward trajectory, maybe even dip into the fives. And of course, we've seen a reversal there. So it's important to keep in mind what impact that does have on the consumer. And every 25 basis point increase in mortgage rates is the equivalent of a 3% increase in home prices from a monthly payment standpoint. So this is really pinching the consumer's wallet.
Yeah. What does it mean for the housing market overall?
Well, I think from the housing market perspective, we continue to see a slow grind higher over the next several years. You know, rates obviously off of the bottom here, but still down year over year. We're still seeing a solid economy. And I think from a very high level, more inventory, as long as it's not distressed, is a good thing to kind of get the wheels back moving again in the housing market, because the resale market has really been constrained by a lack of inventory.
So that's true, and it's very important. So every 25 basis points interest rate is the equivalent of 3% increase in price. So if, for example, you're waiting for prices to come and they come down 10%, but interest rates go up 1%, that's a wash. In fact, you're actually losing because according to his math, that's a 12% increase in price. So waiting for interest rates to go down or prices to go down can be a fool's errand. because they kind of play off of each other, interest rates and house price. So if interest rates go down but prices go up, or prices go down but interest rates go up, you're the loser on that scenario. Happen. The Federal Reserve reduced interest rates by 50 basis points, yet in October, the 30-year mortgage went up by 100 basis points, or a 12% increase in housing price. So even though there's more inventory and prices have come down just a little bit, you're actually spending more on your monthly payment. What should you do? Well, tip number one is ignore the Federal Reserve, because the Federal Reserve has very little to do, if anything, with the 30-year fixed. And when you think about it, that makes sense. Because if they did, all you'd have to do is wait until the next Fed announcement. And if the rates came down, that was time to buy. And if rates went up, you'd wait. But that's not what happens, and everybody knows it. You have to shop for an interest rate every day. And the Federal Reserve just reduced rates by 50 basis points, and interest rates shot up. Number two, ignore the experts. The experts thought that interest rates were going to go down, but interest rates went up. The experts thought that housing pricing would continue to rise, and yet it's coming down. The experts thought the inventory would stay tight, and yet it's increasing drastically. Why? And what does that mean? Called experts don't really know any more or any less than anybody else. It's an educated guess at best based on the data, but oftentimes they're wrong. So therefore, don't follow the experts. Remember, I've said it before and I'll say it again. Real estate is a hyper-local phenomenon. What's true in your state is not true in other states. In fact, what's true on your block is not true on other blocks. And that's the reason that the experts often get it wrong. Number three, don't try and time a real estate market. It's literally impossible. Is there a good time to buy a house? Yes. The best time to buy a house is when your competition is not. Because most of the information that I've given over in this video might seem like common knowledge, but it really isn't. And most home buyers make the same mistakes by either following the Fed, trying to time the market, or listening to the experts. And if they feel like it's not a good time to buy, they're sitting on the fence. And that's the time that you should be in the market. The other thing to do is consider buying a home around Thanksgiving, Christmas, and Hanukkah, because that's when most people are not. Only serious buyers are in the market at that year, and that's the time where you might get the best deal. As far as interest rates or the price of a home is concerned, once you get your house, then you can adjust. When interest rates come down, refinance. Remember, 1% of interest, 100 basis points, equals 12% of price adjustment. So if rates come down by 1%, you're saving 12% off the price. Well, that's the video. Thanks for watching. Remember, like, share, and subscribe. Leave a comment down below and let me know what topics you'd like to discuss. I hope you enjoyed the video, and we'll see you next time.